Tinder's back.
I think Sam is in the other. Where's Mercy?
He's gonna be a little late. He's on a call.
Okay.
And we will need an extra chair. If
Yeah, I'll get some chairs. Hi, Jatinder. Oh, connecting to audio. Do you have the slides? I put them in. Put them in here.
it's the fourth week, yeah.
Good morning. Can you hear me?
Good morning.
Hi, Jatinder. How are you?
Good. How are you guys?
Good, good, good.
Where's the chair?
There we go. Go ahead. Okay. Hi, Sam.
Great, thanks.
Awesome. Yeah, whenever you're ready.
Yeah, good morning, everybody. I don't know, I guess Jatinder, welcome back. It must have been very good last week, so he brought you back this week. I'm just gonna ask everyone to introduce themselves again, so that way everyone knows, who's attending. So Miriam here.
Hello, this is Miriam. I just joined the brokerage last week. So
Okay,
a new
and
agent.
new agent, background,
New agent.
background.
Background is real estate, accounting. Some other.
Okay, that's great. And being a people person, which is very important.
Thank you.
And over here,
Jermaine Jones. I'm a guest here
okay,
today. Thank you
Good.
for having me.
Yeah, sure.
Been in the mortgage business for 3 years, but 23 years in automotive financing. So it's very similar. So, I'm always open to learning new techniques and training. So any opportunity that I get, some training, I'll definitely, take advantage in a good way.
So
yeah, and Jatinder.
yeah. So guys, my background is IT, not directly, related to real estate or anything. So this is my third week at Kingsdale, and yeah, same as you guys, trying to learn as much as I can from Amit and Sam. Yeah.
Great, and I think we will have Sam and we'll have Marcin in a few minutes, and Ilona will also be joining us. And so today, based on last week, people were asking for sort of a checklist. They said, we're a new agent, what do we think about? What do we remember? What should we remember when we go to meet somebody? So when you're new, a lot of times, you start talking about something and then it becomes social, and then you forget, oh, what was I supposed to? So having this, mental checklist, I do that with my kids too. I always tell them, always have a mental checklist before you go in. It could be 5 points, it can be 3 points, it can be 10 points. And this way you're ticking it off. And then at the end, the potential client will also know that, hey, this person's serious. It's not just a social call. It can start, and here's Marcin just joining us now. It can be very social, but you have to get your work done. And part of the work is getting all the stats of the deal, right? So before you set up the deal, you need to know basic things. So what we'll do is we'll go over that. And again, all of you, you're open to ask questions throughout, because I think this is going to be helpful if we can help each other based on our experiences, right? Because all of us come from different areas. And if there's anything, just you can put up your hand or you can just ask. And so let's get started. So this is week 4 of our mortgage training. It's going to continue every week. I think initially we're going to try 6 or 8 sessions. And then we're also going to rely on input from you. If you have questions and if you want us to explore something more, then we'll definitely do that for the next week. All right, so let's see here. Okay, so overview, essential aspects for new agents in real estate. So what does everyone think? Maybe I'll ask Miriam, being that you're new, what do you think that, a new agent would need to sort of know before getting into something?
In new agents, as in like real estate agents
No,
or
more
like.
specifically, we're gonna only talk about mortgage agents.
I think what is more important is that you understand the person's story, see where they're coming from.
Mhm.
And if they like what different financial situation looks like.
Yes,
And then start asking them questions and see how they are planning to, get their mortgage. Are they thinking about first mortgage, second mortgage, like what's the story behind it?
yeah.
And after that, I'm not sure, just ask them.
No, that's right. I think that the key thing to take away with what you just said is ask the question.
Yeah.
So many times we get used to talking ourselves, and I also have that problem is you'll end up talking and you'll be giving all this information, but what we want to do is ask open-ended questions. And this is almost in anything.
Yeah.
Because you're trying to figure out, first of all, is this a client? A
Yeah,
lot of times people will talk and then in the end you're saying, well, do you think that person was a client? You know what? No, I don't think so. I said, okay, then you know that you can move on. Because all of us have limited time.
yeah,
So when you're talking to somebody, if it's social, great, but if it's a client, you said it. Ask the questions, let them give you information. And sometimes we'll talk about case studies of how to deal with different types of people, because there are some people who are very closed. Or they're very, what we call A-type personalities, who only talk about certain things that they do well. So you have to extract information, right? Questions, Jatinder?
Not yet. Yeah, really
Okay.
liked her point. Yeah.
Yeah, no, I mean, a lot of what we talk about is human nature, human behavior, as it applies to a new mortgage agent. And so, does anyone have any examples of when maybe they've met with somebody and they dealt with a challenging situation? I know we have one senior person here at the table who's probably dealt with hundreds of clients. Anything that you remember how this specific aspect came up?
In my case, that one of he's working for the restaurant.
Mhm.
Is he not enough income to showing,
Yes,
right?
yes,
And then I asked them about the family,
yes.
right? He has one brother, right?
Mhm.
He working with some dentist
Mhm.
technician,
Okay,
right? It's a good salary,
yes,
but he working with a sister.
yes,
Right?
yes,
So his sister just helping for his credit,
right,
then, but problem is that the brother doesn't enough money,
yes,
right?
yes,
Sister have money,
yeah,
right? Then two are working together, make a collaboration.
yes,
That happen is that both is the good credit,
yes,
right?
yes,
So then, and they two agreement, then after 5 years,
yes,
they want to be sell their house, then make the whatever is the benefit, it will share.
right, share benefit, yeah.
Benefit.
So excellent, excellent. This is a really good example, probably a little bit more advanced, and we're gonna get into it in the other slides, but this is where being seasoned as an observer and how to correct income disparity, right? So a lot of times, this, right now, this is an issue for a lot of people, is that, they just don't have the income and they can't qualify for mortgage. So as a savvy agent or broker, you're gonna try to think of, okay, how do I inflate or pump up, or let's use a better word, enhance the overall income? And this is by bringing in family members. So again, as an overall, this is really good because you're asking the question, you're thinking about, okay, this is where I'm gonna have an obstacle. And many agents right now are dealing with this issue. How do I get around this income level that's too low, right?
So
Yes,
when I deal with clients sometimes, you know what I mean, I can tell whether a client is kind of guarded,
yeah,
you know what I mean, and once I sense that, what I do is, I kind of move away from, what we're supposed to be talking about, the
Right.
mortgage,
right,
and I try to establish a common ground, I start asking questions.
great,
You have any kids?
yeah,
People always like to talk about their kids.
Yes.
You know what I mean, and then, so my style is becoming your friend,
yes.
you know what I mean,
Yeah,
and a lot of people, they have their, they're
Guard
ready to
up.
fight.
That's right.
And then the more questions that I ask is, then they drop
let
their
them-
hands, you know
That's
what I
right.
mean?
So
And then-
Perfect, and again, people who don't know, Jermaine has a background in auto finance, so again, dealing with if the mortgage is the biggest investment. Nowadays, the car is probably the second biggest investment, right? And in some cases, if we see what Rex brings.
It's more.
So, point is, yeah, so great, Jermaine, to bring out how, and there's some people in sales who talk about this, wall of resistance, right? So when you talk to people, not everybody wants to talk about their financial situation. Culturally, it's also very common in Canada to put up a wall, keep it very private. So Jermaine's suggestion, again, dropping that wall by being more social, right? And we'll get to that. So again, this is just essential aspects of that. So name, address, and basic info, verify names, address, and basic info. So this is a kind of a catch-all. I love the little logo at the bottom of being a detective, you know, or being a researcher. Very important, because the issue right now in the industry, and we can touch on this, is that, you know, in the overall real estate space, mortgage and getting money for mortgages is not always 100% clean. And so the industry has this problem, is that, you know, you have to start from a very high ethical standard. And so the basic information, name, address, you know, we have to support it with ID, right? Even as many of you might know, the lawyers are forced to ask for passports, driver's license. Why? Because there's lots of fraud in the industry, right? There's gonna be 1 to 2%, I think, is the number of deals that sometimes they're too good. Like last week, we did our case example, and you're not sure why this person has $1 million home and no mortgage. So you have to ask for ID, you have to be absolutely comfortable. Is there anything else that would fall into basic information that you would think that you would need? Anybody, Jatinder? Sam, anything else that, I mean, you're gonna get your list of basic, but you know, I'm just asking off the,
Phone number.
yeah, phone number, emails, Jermaine?
If it's a refinance, mortgage statement,
Yeah,
Birthday.
yes, birth date, very important. You know, it happened to me. I was at the pharmacy getting a prescription and they said, oh, you know, there's another person that has exactly your name. And I said, what? Like, I've never heard that. And I said, what's the birth date? And I mentioned, and they go, oh, no, that person's birthday is like way off from yours. So right away, I'm like, is this fraud? Like, is someone else pretend? But no, there's just gonna be somebody else who has the same name. And so we hear about identity theft. Sometimes it can be like innocent identity theft. Like, it's not somebody pretending to be you, it's just absolutely somebody with the same name.
So does the credit report count as a basic info, or is it kind of more
I mean,
than?
that is part, and we're gonna get into that. I think what I like to do is I like to get the information directly from the client, right? As opposed to getting it, so everything is gonna start from the application. And this is an area a lot of agents don't like, right? They always say, oh, there's so much work, there's so much paper. I'm always I said, yeah, but it starts with one initial application with the basic information, and then you go from there. But if that basic information is wrong or missing something, you're gonna have a problem. So always get in the habit of being thorough. You know, be very, very thorough early on. Because I've worked with guys who are very sloppy, like they're great talkers. They're like, I got a deal for you. I said, okay, great. And they send me the deal, and then like half of it's missing. And I'm like, who's gonna get this information? They're like, oh, could you do it? I said, yeah, it's gonna cost you. This is because my time, and that's what you all have to. So one of the trainers taught me. He goes, you know, who are the people we respect most in society? We respect medical specialists, right? If you have a call with a specialist or a doctor, you are gonna lock in that 8 minutes. And so we have to be kind of the same, that we have to value our time. Right now, agents are not really valued, right? Everybody's like, oh, you do the work. You do all this work. Last week, you remember we had a lady here, Tiara, she had $1 million deal. And she did so much work. And in the end, they moved it to someone else for a very, very small basis, you know, amount. Like there was, I think, 10 or 20 basis points. And there was another issue. They wanted some sort of referral fee, something. She said no. She lost the deal after spending hours. So I think that's one thing you should always remember. value your time, don't give it away. Right?
Yep.
Agreed?
Yeah.
Watching out for fraud risk, we talked about it last week, about sort of going with your gut, but then as a new agent, you might not even have a gut feel, that you might not know what you're looking for. You might be easy to manipulate, right? So that's another thing, trying to be a little bit curious and always going with, does this make sense? Like, this can't be right. There's gotta be something going on, and follow that. Any tips from anybody else for preventative tips? Sam, I don't know, because you've been in it, it might be helpful for the new agents.
Asking about the employer or the current salary might help, because some people try to lie.
Another slide, but that's absolutely true. You want to make the calls to verify information. Don't assume what they say is actually correct. Yeah, Sam?
Yeah, so that is mostly the qualified ID, like the driver license.
Yes.
To check the address
Yeah,
and then the email and the birthday.
yes,
And then, the currently now, the ID, the backside, they have a code
yes,
to, usually I just check the code either.
yes.
Some of the in the government, they ask about the 8-digit number too, right?
Yes, so that's absolutely true. So the province of Ontario does have an actual portal that you can go to and enter in driver's license information and to verify that it actually is that person, right? Because nowadays, people have fake driver's license. So you want to be always thinking that, okay, well, I know the person, but let me go to this site and we can always send it to you too. You can keep it on your phone, on your computer, you enter it in, it just verifies. The second thing is with SIM cards are not used as ID. So that's something that people will try to say to you, oh, I only have a SIM card, I don't have anything else, the library card. No, we're gonna go with official government documentation. Right? Questions or comments? We're flying through these topics.
Has that always been a thing, the SIM card, that's not?
I
considered
think it
like-
was a recent decision, because SIM cards can also be fraudulently made, because they're
Right.
very simple, there's no picture.
It's just a number, right?
It's just a number, there's
But you can
no,
verify that, right? Like, that's not that hard to.
I don't think SIM cards are like considered. Quote, enough for this, like, I
Okay.
think what we've decided, or what the powers that be have decided, is that, SIM card. It's actually not even legit, a lot of times they'll have an asterisk saying optional, right?
So
You put
it's like
optional.
supporting documentation, but you wouldn't like rely on it.
I wouldn't rely on it, because it doesn't really count as the top two. I don't know about Jermaine when he's doing the automotive side.
Yeah, it's not required. The main pieces of identification usually is a passport,
And
driver's
ID,
license.
yeah.
Or what's the purple
PR?
card there?
Anyway,
The-
photo ID.
Photo
Yeah,
ID.
yeah.
Okay.
Whereas the.
Anything else, health
And not
cards
health
obviously
card.
aren't, you can't use health card as
Yeah.
identification.
Yeah,
Got
yeah,
it.
health card doesn't count either,
Yeah.
so
Yeah.
I think the rule of thumb is that can it be manipulated, can it be fraudulent? And right now, I mean, technically, the passport and the driver's license are your two best
For sure.
options. Okay. Income verification, so, we're gonna talk about all kinds of stuff here, this is sort of, I would say, one of the trickiest areas right now. Because a lot of people cannot qualify under present interest rate and stress tests, so you as an agent need to sort of go through this. If there was one area that's being abused in fraud, it's probably this one. And so again, as an agent, you're almost in a conflict. On one hand, you only get paid if the deal gets done. Oh, welcome, Ferris Bashir, welcome. So he's just connecting. So, you only get paid if you can get the deal done, and you only get the deal done if you can verify the income. So is there any, is it fair to put it on you to verify the income? Because you're technically in a position of conflict. So you should have a third party, and most offices, I think the broker principal will verify all that, right? You'll review it. So you guys are the collectors of the information. You have to do your best efforts to make sure it's legitimate. And then pass it on for, I guess, a second review. So standard mortgage application, your income is going to be coming from pay stubs and confirmations of the last 2 years. Also notice the assessments, if you're a sole proprietor or your own business, that's tricky, but it can be done. As we already heard from Sam, you know, bringing in other family members to support that. What other types of income documents do people, have they seen, or do you think you're gonna see?
For business owners, sometimes they ask for financials
Correct,
for the company's financials.
yes, going back
Going back
sometimes
to
2 to 3
years.
years, that's correct. Now, again, it depends really here on the lender, so, you know, if we're dealing with banks and income or trust companies and credit unions, they will typically always ask for this. Now, as and when you move on to your level 2 and are open to do private, many privates do not look for income verification, because all they do is look at the asset, which is the real estate. But for now, you should always be considering the income verification piece, pardon me, because most banks and financial institutions will be spending a lot of time verifying this. Marcin, have you had any interesting experiences when it comes to income verification yet?
No, not at this time, yeah.
Sam, anything on that?
There's a piece, what type is the business type?
Yes.
3 business type.
Yeah.
It's a sole proprietorship
Yeah,
and then partnership.
Yeah.
And corporation.
right,
That is a different type of the document they need.
right,
So most of the sole proprietorship partnership need a master business license, what showing to the they doing the business, how they will be doing. That we request the Ontario is the master business license.
yes,
And a corporation, we need the article corporation.
articles of
Yeah, that
incorporation.
is how long gonna be there, when develop the
When you gonna incorporate it, yeah, and how long you been running, and who are the shareholders, and, yeah, so all of that is part of
And then
that,
financial 2-year or 3-year financial statement.
yes,
And then business, sole proprietorship and partnership, just only 2-year T1 general.
right,
Yeah, showing for their business income.
right,
And then the third page, the middle of the business income, like commission income,
right,
like the auto dealership or real estate or even mortgage agent,
right,
that is commission.
right. Yeah, there's different ways to show how you're getting your money, right? So you can get it as commission income, you can get it as dividend income. The issue here, and as a previous business owner, you know, the whole idea is you want to reduce the amount of tax you pay, right? So the logic is always that a business owner would draw the least amount of income because they don't want to pay a lot of tax. But conversely, that'll hurt you
Yeah.
when you go to a bank or any financial institution, because you'll have to sort of justify, well, yeah, I only drew out this much because I didn't want to pay tax, but now I want a mortgage, but I can actually pay for this one. So and most institutions have a way of figuring that out, because they know that that's what people do. So they'll say, okay, fine, we're gonna charge back, or we're gonna build up your income to your actual income.
Yeah.
And so this is what we're gonna get at, but I think we're still having issues. Marion, we were talking about my daughter, who's, you know, almost a lawyer, and she was lamenting, she's like, oh, I don't think I could afford a house in Toronto. I said, well, yeah, unless you marry someone who earns more than you. So, yeah, so I think a lot of people are figuring this out, like, how do we do the income verification? You almost need some other source, and that can be family, you know, or other people that are helping you come up with that number. So instead of falsely listing your income, you just bring up other
Just
people.
do gift letters.
Gift letters, so yeah, so gift letters are another way, but again, depending on the lender, they have a few restrictions. Is that being fairly clear?
Yeah.
Faris, Bashir, welcome to our training session today. Now, addressing common challenges, any other challenges, Sam, that new agents, I mean, I think this is good, and when you're at this stage, that means you actually have a potential client, which is really good. Because the challenge is always like getting the client, and then the next stage is sort of making sure that the client can qualify for a mortgage with one of the lenders that you have.
Tenure at the job, if somebody just started a job, that's a challenge.
Yeah.
That is a challenge, yeah, so the rule of thumb, I think, 2 years sometimes 3 years, you have to list the previous one.
And if the, what I've experienced is if, so say, for example, somebody was I don't know, when they change their whole, what they do,
right.
you
Yeah.
know what I mean? So
They will change.
if they were a chef before, and now all of a sudden they're a drywaller.
Yeah.
You know what I mean? And they
Yeah.
just got their job last week. That might be a little bit of a challenge,
Well, I
right?
guess
So
if
things
they-
like that,
Obviously, they weren't that.
you know, that might be a little bit of a challenge, right? So,
Hopefully, they're a better drywall than they were, yeah,
yeah,
Or
that
if
might
they
be an
change their
issue.
jobs too
Yeah.
often,
too often, correct.
Yeah,
no say.
Yeah, these are all patterns, and as agents, you're gonna be good at it, once you get into it. You'll start looking at certain patterns
Yeah.
and see that things are they legitimate? Like, is this person what they're saying they are? Or they're just like pulling a fast one on me,
Yeah.
just seeing if I can get them money, right?
what I also do as well is in most cases, when you pull a credit bureau, it also shows. In most cases, not all the time, but it'll show their, you know, their last employment.
Right.
You know, or occupation or what they do, right? And then you could always look at that.
Doesn't, sometimes they don't.
Not all the time, but
update
majority
at-
of the time, majority of the time,
majority of the
Depends
time.
on the employer, right? So if it's like
It's a bit,
a large firm.
yeah,
That reports, then you're gonna get all that information. And all that does is, again, it helps you verify
yeah,
that it's legitimate. So if there's ever a problem later, and if the lender comes back to you and says, hey, man, this was like absolutely, I said, well, look, I followed my checklist.
yeah,
Here's the checklist that Amit gave me, and I check off this, I verified, I checked this, I phoned this person. And so very important to keep good notes, because if you get in the habit, then no one can question you.
right.
To say, hey, how did you let this go? Well, no, I did my normal check of 5 things and it checked out.
Yeah.
Right, right. Anything else, Sam, for that? No, that's good. Okay. And again, if you have any questions, just jump in. Don't want to go too fast on some of this stuff. Credit reports. Okay, so Marcin, why are credit reports important?
Well, I believe like Jermaine mentioned, right, when you get the credit report, there's a lot of things that you can verify,
Yeah.
right? For example, like you get their credit history,
Yeah.
right, so you can see if they can if they've had a history of paying back debts,
Yeah.
right? That'll obviously qualify them when you do wanna make the actual application, right? But then there's also other details, like you mentioned, right, you can verify their past employment,
Yes.
right? So
Yeah.
that's another way that you can kind of check that to make sure that they're not trying to pull a fast one on you. Right?
Yeah, I think in that area, it's either they're intentionally pulling a fast one, or they actually have no idea, right? So
Right.
sometimes it's like, yeah, they're intentionally trying to do it, or they're just ignorant, and I think this is gonna happen more with a lot of new residents. So I do work with some people who are sort of trying to market just to new residents. And I use the term resident as opposed to using the term immigrant, because it
Right.
used to always be new immigrant, and it would always be, and I found that using a term immigrant, some people, it has almost a
like
negative connotation, so
Yeah, oh, for sure.
using the term resident, and again, it's just language, right? It
Right.
sort of makes it a little bit more inclusive, so new resident might not know, right? And they just like, oh, this is what I have, and then you say, well, no, hang on, this doesn't pass the tests here
Right.
in Canada. To get you a mortgage. Now, what about understanding credit scores? Sam, any interesting cases with credit reporting?
For example, my case, when I
Yes.
was a RBC mortgage specialist.
Yes,
I tried my mortgage for the one of my friend.
Yes.
Because the mortgage on specific that on mortgage.
Yeah.
I want my mortgage, I cannot do anything
Correct.
on my mortgage.
correct.
I have to give the third party or friend.
Yes.
is doing for that.
Right,
That time, my friend checked my credit report,
yes,
that was 600. Wow, it's amazing, because previous year, I check every year.
yes.
Right,
yeah,
that was almost 730, something like that.
right.
Then when I checked that, some of my client name is the same,
Yes,
last name is
yes.
the same as family
Yes.
name.
Yes, yes, yes.
First name is the same,
Very important.
then
There's
mix it,
Similar
then
names.
he doesn't pay $100,000 loan to RBC
Oh,
credit card. something
Yeah,
like that.
600 credit, you're lucky you got 600.
Then
Yeah.
I just call to that client to say, well, that some of the mistake from the RBC system, right?
Okay.
That is the mix my name on that,
Yeah.
his credit too, right?
So there we go, this is a perfect example where names in certain communities are very similar. And so banks and institutions and credit companies don't really care, they just throw you in. And it's up to you to police it. And in this case, you as mortgage agents will need to educate your client to say, hey, Mr. and Mrs. Smith, or Mr. and Mrs. Singh, I just pulled your report, is there any reason why, it's this? And they might have a similar situation that, oh, the name's similar.
Yes,
They
it's
just
called
put it-
cross, they call it cross, like the name's crossed, right?
Yeah,
And how to
How do you
fix
solve
that,
that?
I'm sorry,
How do you, yeah, it's like how to fix it?
pull the bureau with the social insurance number. That's where the social insurance number comes in, now the social insurance number will be able to pull the accurate. The accurate credit report, if you pull the bureau and you don't put the social insurance number and the name is a very common name. And say, for example, Dave Smith, there was a Dave Smith that lived in that area, you know what I mean, like then it'll definitely cross, right?
right, so on the application, it's a good idea to have the SIN number listed. And you get in the habit of asking for SIN number and explaining, hey, we're not gonna use the SIN number as one of your primary IDs, but we're gonna use it when we do the credit report, so we make sure that it's accurate. And so the key here is to make sure the client understands that you're not working against them, like you're part of their team. You're trying to make the best presentation with a lender. And to do that, we need to have a proper credit report. And part of that is having the SIN number, so you make sure you don't have any cross or any mix-ups. Anything else in the credit report area? I mean, I think we have, yeah, go ahead.
Sometimes when you speak with a client, I'll always ask, what do you think your, just,
Good idea.
what do you think your credit is,
Yeah.
your scores?
Right.
Oh, my credit, my score is 750, okay, that's good, you know what I mean?
Yeah.
And then what happens now is you pull the bureau,
Right.
right, and it shows something different,
It's like 5 here.
or it might 650,
Yeah.
right, and then they get pissed off, how
Yeah.
dare you?
It's your
You know what I
fault.
mean? Like,
Hello?
how dare you, right? Now, there's Equifax and there's TransUnion,
Yeah, yeah.
and in most cases. Your Equifax and TransUnion show two different numbers, so maybe they might have a 750 on Equifax, but then we might be pulling a TransUnion or whatnot. Because the banks look at, I'm not quite sure which banks look at TransUnion and which banks look at Equifax, I think RBC looks at.
Most to be TransUnion. No, the most to be usually Equifax.
Yeah.
Second option, RBC, second option is TransUnion.
So
Okay,
is it still acceptable?
Why? Because the Equifax, TransUnion always 6 months late.
oh,
That's why
okay,
they are high
Oh.
rate of TransUnion.
got you,
Right?
okay, learn something new every day,
So
well, I'm glad I
that's why
came.
these trainings are-
I didn't know that.
Finally,
I didn't
we
know
learned
that, that's
something.
amazing,
That's-
oh
that's
my
why we
gosh,
feel
that's
it's-
great, oh my god.
It's
Thank you.
good to have
Thank you,
people,
thank you.
they always
So
pick up some.
always
Thank you.
prefer to try the Equifax,
Yeah,
right?
yeah,
Yeah, so the venue Equifax is the more legend to
Yeah,
the,
yeah.
Yes.
the score.
right,
But always TransUnion, 6 months late.
wow, I didn't know that, that's
So,
crazy,
yeah, so whenever in the RBC is when you put it out of Equifax,
yeah,
it doesn't have any number,
okay,
probably new immigration, wherever you
Right,
get that,
right.
right? Then you do not using just only another ones, TransUnion.
got you,
Yeah.
okay,
Yeah, and sometimes, if you know the client's situation and they said, oh, I just had a recent issue, but it shouldn't be a problem. You might want something that's 6 months old, because then it avoids whatever. Again,
That's right.
right, so it just depends, and this is where.
Is it true that sometimes if you pay, for instance, you have like, I don't know, $5,000 on your credit card, and if you pay it right away, then your score will go higher right away? Because that's,
I think that goes to how they work it out, and I think they're so careful not to let out any of these little things, because if that was the case, people could game the situation, right? And there's
Well-
still an interest in gaming credit reports?
If they could pay $5,000,
Like if you owe
When you're
five
debt,
thousand.
if you owe five, for instance, if you owe 5,000 on your credit.
Yeah.
And then you pay the 5,000 right away,
And
like most of it or whatever.
would it increase your score?
It would increase.
Absolutely, because then it goes towards your ratio, your debt ratio.
I think it should.
does, 100%.
It's,
But the question is how quickly?
how quickly. I
It's
thought it's kind of like right away or.
No, no.
very- Very short.
40, probably like 30 to 40 days. Because Equifax, it reports
generates
once every,
every-
yeah.
And then even how many credit card you want. Like if you want credit card, you pay every month, it doesn't fit effect of the credit. Or you have the 10 credit card,
Yeah.
you pay right away, everything, you know, the phone pay each month, then they effect more.
Yeah.
They pay frequently, how many credit card, how many line of credit, they counting.
Yeah.
Right? And frequently, how many pay, how many, you know, the effect about, you know, like the how many percent you're gonna be using the credit limit.
Yeah, and I think this goes to an interesting point. The whole idea of a credit report is not necessarily to show the lender that you're legitimate and that you'll pay. It's to say that if you have one credit card and you don't use it, as opposed to if you have 10 credit cards and you use them and pay them all on time, they'd probably like the latter because they know that you can use credit and you will actually pay it. As opposed to someone who just gets it and never uses it. You're actually not of any benefit to them, right? They really want to see that you're gonna take the credit and in the future take more
Yeah.
and pay it back.
So
Good.
I have a question. Does it matter if you have 3 visas or 4 visas, or you should be having a Visa and a MasterCard combination so that they are 2 different credit card companies? I was once told, you know, by somebody that if you
So
have a
it's-
Visa, you
I
should
think the
also
credit
have a.
cards, Nate, like the credit card provider is all looked upon in the same way. I think so, and I think Jermaine might have. an
Yeah,
opinion
sorry,
on
the
that.
question was what? If-
So would it make a difference if you had
Which
Visa
card you have?
and or MasterCard, different numbers of them?
is there any benefit to that, I guess?
Or do they look at all the same?
They look at it all the same, like, you know, obviously when you're choosing a credit card, you wanna get a credit card that has, you know, the lowest interest or maybe points or stuff like that, but
Cashbacks
there's
or,
really no
yeah,
benefit
travel
to have.
benefits.
You know, whether you have a MasterCard or a Visa, it's all the same.
It's interesting because it kind of goes to human behavior. Normally, when people choose anything, they would choose the lowest interest and the lowest payment. But I have friends who have Amex and they can't wait to pay more. Like they're like, oh, I have Amex Silver and I can't wait, you know, they offered me Amex Black. And I'm like, and he goes, it's only $5,000 and I can have a credit limit of this much. I said, and what are you gonna do? He goes, obviously I'm gonna go for that. So it's actually, it's the opposite to what you would think, quote, normal middle-class people would think about, but it becomes aspirational.
But you know,
I wanna pay more.
but a black Amex is a status symbol.
It's
When you pull that out, that's a
Senior.
status symbol.
You know, see, this is what I mean.
Yeah.
This is the beauty of credit and finance and how they've sort of made it so that people will actually pay you more for a piece of plastic that has somehow status.
Status, 100%.
No, it is a status, but at the same time, if, for instance, if you're a business owner or whatever.
Yes,
Sometimes in a month you need cash
Right.
and you know that
It's
you're gonna
there.
get cash at the, like,
Yes.
for instance, on the 15th of the month, but
Yes.
not at the 30th of the month. So
Correct.
you need that,
yes.
that extra cash,
A
so
line of
that
credit
that's,
does that too, right?
but it that, credit card is easier to get.
Yeah.
And then you also collect points with them, with line of credit, you don't
Yeah.
collect, and if the business is generating in a higher volume.
Yeah.
That points that you get from a credit card, that point's worth something.
Yeah,
Some,
yeah.
some.
That's a whole area, you know,
Yeah,
about getting points. Like I have a friend, he has 14 cards. Like he lives on Post Road. He spends all his time deciding and figuring out how he can get more points on this and also airlines, right? So he took a flight recently. I said, where are you going? He goes, oh, I'm going to Iceland because they have this promo that's gonna cost me this much to go to Iceland, but I get this many points. And that's gonna push me into a higher category, which will get me into the lounge in Australia, which I'm planning to do next year. I'm like, I
why
can't
would, why
believe
would
that.
you waste so
Like,
much
no,
time?
he spends all his time, and he's a real estate guy, right? Owns real estate, and he's like, yeah, and his mind thinks how he can get into
No, but
different
sometimes it's like.
lounges.
Get your coffee.
I realize it's your coffee costs nothing as opposed to, but again, I think it ties into knowing your client, knowing what your client's about, and sometimes you might be able to sell them a product. And I always laugh when people say that, they say, oh, mortgage, it's a product. I said, well, it's just a loan backed up by your house, right? Or some real estate. So important, not in regards to credit report, but in regards to clients and understanding what their needs are, right? They might not think like you, and that's what I've learned. Not everybody thinks like us. They have their own thoughts, and you have to figure out what's important. Thank you for all the comments there. Appraisal evaluation, my favorite section. It's so the role of the appraisal, and again, for all of you, the question is, you are the go-between the lender and the client. And as much as income's important, because they're gonna pay it back, it's important to show credit report. I think appraisal evaluation is really the bottom line, right? So no matter what the person's income is, if there's ever an issue, the lender is gonna have to deal with the value of the property. And who's gonna let them know? So, and I'm open to suggestion questions. I know Sam's probably got some, Jermaine's probably got some. I mean, I primarily work on evaluations for lenders, and it's because they want another pair of eyes to look at this deal. And saying, we got a client and everybody wants this deal to happen, and this is the house and this is where it is. Do you think it's worth this? That's essentially what the appraisal is doing. It's very lengthy, it's pricey in some cases, it can take time. Maybe next or the next few trainings, I'll bring a sample appraisal, we can sort of go through it. Most of it's boilerplate, and that term, if you don't know what the boilerplate, it's the same thing that they put in everything, and they dress it up to make it look good, and in the end, they give you a price. They say, yes, 123 Main Street in this town in Ontario, on this day is worth this. Oh, and then there's a whole bunch of legal stuff that says that it might not, and this and this and this, and they just try to get them out of it. But essentially, that is what it is, right? Any comments from anybody? Questions in regards to appraisal?
The appraisal, especially nowadays in today's climate, everybody's upset at appraisals right now because they're coming in a lot lower than, maybe a year and a half ago. But the challenges are, wow, like I'm going through one right now. You know what I mean? Like a client says, oh, my house is worth $1 million. And we do the deal, we structure the deal based on, what the client says. And when the appraisal comes in lower,
How much?
8.
Okay, so let's use that example.
Yeah.
$1 million property, and just to give
Yeah.
some of these new guys an
Yeah.
example. So $1 million property, and they need a first mortgage.
First one.
And what are they looking for as far as a percentage LTV or amount?
80%.
They're looking for an 80% loan to value. Okay, so perfect math, $1 million. Jatinder, they need 80%. How much do they need? 800,000, right? And so 800,000, and sure, interest, fee, whatever is a first. Yeah, okay, so it's a first and it's a bank, everything checks out, and now the appraisal comes back at 850. What's the math on that?
You have to pay the difference.
Correct, and the difference would be, because it's gonna be 80% now of 850, right?
And then
Which is much less, so the client will have to come up with the difference between that 800 and that whatever 670 or 660 number, and that's the crunch. Because then it's like, oh, what are we gonna do? How are we gonna get that money? Right? Solution?
private.
Well, private what? Private second, or take it all to private for everything, but they're already at 80%. Which is sort of like, and then this is the issue right now with lenders, because lenders are like, hey, you know what? Okay, I'm gonna do that deal, 80%, it's $1 million, okay. But what's it gonna be worth now in 6 months' time or a year's time when the guy can't pay? And if they can't pay the mortgage, and I have a couple of cases like that, and they walk away. What are you gonna do with the house? Try to sell it. And what are we gonna get for it when we sell it? Maybe 8. maybe 785, whatever, lender's out money. Because the lender lent him 800. So that's why lenders are being very, very conservative, and agents like you guys are gonna be caught in the middle. Because you're gonna be the bad cop. They're gonna come to you and say, what do you mean it's only worth this? You say, well, it wasn't, it was the appraiser. So,
Do we always have to go with what? So they put their offer for 1 million, right? So that's how much they bought the house for 1 million.
That's the deal that they
That's
negotiate,
the
yeah,
thing. negotiate.
that's the deal that they
and
negotiate.
again, this is time value of money, so. Last year, there were a lot of deals, and I would go and do evaluations on properties, and I would laugh because I'd be in those small communities. Either east, north, or west, and the property's over $1 million. And it's like 2,800 square feet. They bought it for like 750 2 years ago, and now it's worth more than $1 million. And everyone's like, this is great, we're gonna do it, and I'd be like, As the market slows, and as rates go up, and as things go down, what will this house be worth?
Less.
Right,
Much less.
and the reason why I like evaluation is I'm the only guy who doesn't have any skin in the game that needs to get the deal done,
Yeah.
right? I charge my lender clients flat. I said, I don't care if you do it. You don't have to do it. And I said, you want me to do that? Because if I only got paid if the deal got done, I would say, yes, it's worth it. Right? Right?
Of course,
I mean,
of course.
and that's the beauty, and it's actually a big problem in the industry. And that's why banks and financial institutions have lists of appraisers they value.
Yeah.
They will only go through these because many appraisers, again, human nature, it's happened to me. People come in, they say, hey, listen, I really respect what you do, and how much to put this on the appraisal? They give you the number, they write it right here, they say 1, how much? Here's an envelope for you, here's hockey tickets for you. And you're like, what's happening here? You know, you're being bought, right? So this is where you as agents have to be very careful to get in front of appraisal reports, meet appraisers, and again, what's an evaluator? I'm not a licensed appraiser, and I don't do appraisals, but there's lenders who trust my opinion and will pay me to evaluate. And this is essentially a 2-page report. This is my view, this is comparables. Now, this is where there's a lot of abuse, because you can look at a property and say, I think it's worth $1 million. Here's my comparables from this property and this property, but it's not like a science, it's more of an art, and you can almost make anything fit. You know, you can say, well, I kind of think this house is worth, it sold for this much, in your example, it sold for, 1.1 million. And if you kind of compare it to yours, you would take off 100, yeah, it's good for $1 million. Or here's another one, it sold for 900, and it's not as good as yours, so I would add 100, and it's good for $1 million. And you know what, I've done a third one for you. Third one was on the same street. 3 years ago, sold for 1.15 million, I've sort of adjusted it, it's good for 1.11 million, so here's it all together. And here it is,
Yeah.
1,020,000. So,
Yeah.
so this is where a lot of lenders are gonna be like, we don't trust the number. We need you to go back.
Yeah.
So that's where Jermaine goes back to the client and say, hey, wasn't me, but the comps in the area. In the last 60 days, a lot of lenders will say this, they say, I want comps, but I want comps for the last 60 days, I don't want last year's comps. I don't want 2 years ago comparables, because they're inflated number. And what they'll do, and you might not, so the underwriting experience is they'll take the appraisal number or the evaluation number, and then they will reduce it. Because they say, I'm budgeting it for another 10% reduction.
So,
also-
Amit, I have a question. How recent should the appraisal be? It should be less than 6 months, or it should be very recent?
I mean, I
just
think
for
it depends on the lender, right? Each lender has their own sort of preferences, so as you get more and more into it. And these are great questions to ask when you meet lenders or call a lender. So you can have a checklist of questions for lenders. So whenever you meet a lender, say, hey, that's great, your RBC, how long you been in the business, good. What kind of deals do you guys like to see? And there'll be like you know, certain things they're gonna tell you. They're gonna say, oh yeah, we're sort of looking for a single family home. We're looking for a LTV or loan to value in this range. We're looking for terms of around here, and they'll have an idea, like a model. And you'll say, okay, I'm gonna try to find you that deal. Then you go to lender B and say, listen, I've got a whole bunch of lenders who love these sort of deals. What if I have a deal that doesn't fit this? Will you look at it? They'll say, oh yeah, we can go up to 80% LTV. Okay, anything else that I need to know? Fine, so then you have this list of people who are gonna provide you money. So that if you're Jermaine and you get a lender say, well, listen, you know, I'm not happy with this, to go to somebody else, right? And just shop it around.
And then once you know that they want to shop it around is when the clients, well, in some cases, they might request to see the appraisal.
Yeah.
You know what I mean? I don't know about what, you know, in your, with what you do you, when the clients want to see the appraisal, do you send it to them? Or what would you do in a situation like that where the
That
client
depends
says,
on the lender. Depends on lender, most of the lender now are using for the desktop operator.
no, I was saying the client. So if the client does the appraisal, right, and the client says, I want to see the appraisal, do you send the appraisal to your clients or?
Client, if your client he want to pay.
Right.
No, that's already paid for.
Who paid for it?
Who paid for it?
Well, the client pays for the appraisal, right? But what I'm saying is
You ordered it, I guess.
I ordered it.
You
So it's my appraisal.
Correct.
Okay.
It's my appraisal, but what I'm saying is when clients say, okay, hey, I want to see the appraisal, 9 times out of 10 is because they want to send it to somebody else. Because they got somebody else shopping it.
Yeah.
So I'm asking you, do you send the appraisal to your client if he asks or if she asks for the appraisal? You don't send it.
Yeah.
Okay.
Most of my lenders, I've actually told them that too. I said, you know, they've asked me and I said, well, personally, I wouldn't send it. Make sure it's an internal document and that's gonna be enough. If you say, no, it's an internal document, that's it. But that's what the client's doing because for every appraisal, like I just reviewed one today, there's like $650 for a property in Hamilton. And I know that they ordered it, the client ordered it. So benefit of, you know, the client's gonna pay. If you order it, then you have this thing about, well, is it mine, is it the lender? But if the client orders it, then they can just move, you know, send it to everybody.
That's right.
But I look at that very suspiciously, because I know when the client orders it, they can have that chat with the appraiser and say, hey, man.
Or doctor, they can doctor.
Yeah.
They can.
They can doctor it,
they
there's
can-
lots
they
of
can
ways to manipulate the number, right? All you have to do is get to that one section.
So are you suggesting that it's better that we as an agent, we order it?
You order it
You-
and you lock it and it's your appraisal.
Yeah.
The client just pays. It's your appraisal, so it's gonna come directly to you, so
Yes.
you have
But
control.
usually when, if you charge them, they're gonna say, oh,
But they're not gonna know,
No,
actually,
no.
most clients will know, so I would say that, yes, you're charging them, they're paying for it. But you'll say, look, I'm gonna quarterback this, I'm gonna look
Because it
after it.
happened to me that I paid for it and I know that I paid for it.
Oh, you pay for it?
I as a client
Okay,
paid for it.
yeah.
And I know that I paid for it, so, and I think I got the appraisal.
Yeah.
Yeah,
that's
so
fine.
when you're-
Whoever pays gets it.
When you're paying, so when I'm not sure, like when I deal with like Crosstown or whatever the case may be, so when you're doing the order online, it'll ask you who's paying for it and who owns the appraisal. So the client pays for it, but you own it. Right? So the client will probably get a link to pay for it, right? And then, but you own it. So it'll come directly to you. So it's not going to the client. So you control everything. Because if the appraisal goes to the client,
They're gonna shop it and you're gonna be out.
you're gonna be in a competition with 5 different, agents, you know what I mean, working this deal. If you have the appraisal, in most cases, the client's not gonna walk away from $700. If they pay for the appraisal and you have it, you're in control. And then also too, them paying for the appraisal also shows seriousness from the client as well. You know what I mean? When the client is kind of iffy about the appraisal, then you know that maybe he and she's shopping around, or maybe they're just unsure if they want to go ahead with this, right? Once they pay for the appraisal, then you know that
That's
some
the-
sort of
the-
seriousness.
Yeah, this
from-
is very good for Jatinder and Paris. This is actually another little nuanced point. That how do you know that the client is really genuine and is your client, right? Jatinder, you have a question?
No, I just gave a thumbs up to Jeremy.
Oh,
It's a
and-
very
and-
good point. Yeah, yeah, yeah.
Yeah, so you know, if you can control who's paying for what, then you'll be able to I always use the term quarterback, but you end up being the only person they're dealing with. A lot of times, the industry is so fraught with so many mortgage agents all over the place, and especially now on social media, like there's so many, and everyone's like, just DM me, I'll look after, you know, I'll get you something, I'll get you, so you should always have some sort of a marker to say, okay, you know what, this is gonna be the cost of the appraisal. I use a very good accredited appraiser that's, you know, used by a lot of lenders, and this is gonna be the fee. You can e-transfer them directly, or I can get them to bill me and you can send, whatever. There has to be some payment. Once the payment is made, and you know, one of my private lenders does that with the evaluation, they know that I typically charge less than an appraiser, but they'll say, you gotta send me the money before I even get involved. Because there's been cases where I start getting involved and then they don't pay. And it's like, well, hang on, you know, the lender has to pay me because I'm not looking at it or going anywhere or calling anyone unless I get paid. Because the payment is the issue in the industry. People tend to try to do things without paying people, and then they'll just take it somewhere else.
There has been, I'm not gonna lie to you, there has been situations where, and I've been told not to do this. But there are some situations where I've paid for an appraisal. Client didn't have the money, Jermaine, I don't have it, you know what I mean? And I'm gambling,
Yes.
you know what I mean? That is what you call gambling,
It's
you know what I
gambling,
mean? Like,
yes.
that is
And
gambling.
the lights are off.
Yeah.
It's like, well, Jermaine,
That is
next time we have a
gambling.
game,
That is gambling and I probably lost once,
Yeah.
you know what I mean? But it's not something that you wanna practice.
Hmm.
And clients will, if they feel like they could get over on you, hey, you know, money's tight, I don't have it, you know what I mean? I don't, and then you're, you know, you want the deal, you know what I mean? You want the deal, you're like, okay.
No,
you know what,
but
let me
that
just-
separates you from a lot of other guys, you're
Yeah.
gonna say, no, I have a policy, you have to pay. But once you make the payment, now you're in that circle of influence, right? So if that payment was $500-600 and you feel that this is a good deal, and at the end of the day, you know that you're gonna make X, then it's a calculated decision.
Yeah, it's an,
It
it's
depends on
a-
how much is the.
Let's assume it'll be 700.
yeah,
Yeah,
Yeah.
so I think you're gonna do it, you know, you're gonna do it once. And then once you do it and you get burned.
oh, then it just becomes a policy, you're just
That's
not
right,
doing it, you
That's
know what I
right.
mean? You're
Or
not,
you
you're
might
not
do
doing
it
it.
twice. I've had some guys who've done it twice and they're like, well, you know what, I lost on that, but I'm gonna make it on the next one. That's the attitude to have.
Now, there are some situations, there are some situations where, you know, if you're refinancing, right, and you know that
You
these
know that there
people.
is money.
Yeah, or you know that these people just don't have it, you know what I mean, they just don't have it, that's something that you would have to kind of, on your own, you gotta do your own assessment on that, right?
And that's, you know, if you really know the client and you've gotten to know the client, then you should be able to make that call.
Yeah.
You know, when it comes to clients, early days, it's gonna be friends and family that you guys
Yeah,
are
yeah.
gonna be dealing with.
Yeah.
So that's where maybe the family pressure will come in, say, hey, listen, this is an out-of-pocket expense. If they're a business owner, look, I'm gonna provide you with the receipt, you can probably write it off depending on what it is. You always have to make sure that they're willing to commit something. It's very easy to talk, right? Get you to work and say, okay, you know, Mary's gonna put in 10 hours on this file. At the end of the day, is she gonna get paid? We don't know. Yeah. So I just moved it over to loan to value and lender preferences, so definition and importance of LTV, so anyone wanna jump in? And we talked about it already a little bit.
Certain lenders go higher on LTVs, right?
Mhm.
So that's why it's important when lenders wanna do you know, workshops or presentations and stuff like that, it's really good to sit in on these presentations, so you know. You
Where
know,
to go
everybody's lending criteria, some people might go a little bit higher, then the rates are a little bit higher, or, you know what I mean,
What's the
so,
highest LTV you've seen?
like, right now,
Like what a lender will go to?
90.
Yeah, so there are some private guys, I have a couple who go to 90% loan to value, but their fees and the interest they charge is very high. Now, last year, I always looked at what they charge and said, gee, that's really high. Now, compared to what the prevailing rate is, I mean, they've definitely gone up. And they're probably up to what credit cards would charge. Like they're at 20% or something. But again, lesson learned, good to have these people in your back pocket, because you never know. Don't make the mind up for the client. The client said, I gotta do this, Jermaine, Miriam, I gotta do this, this has to be done. I don't care. Let's get it done. So you've got someone who can get it done.
Yeah.
Right.
Hey Ferris, we haven't heard from you much, your mic's off, but if you have any questions, just jump in. Overview of lender preference, yeah, we had a meeting here 2 weeks ago with the gentleman from
RFA.
RFA. Yeah, and RFA has certain lender preference, and I find all lenders have lender preference, and sometimes it changes depending on time of year and, you know, their own results. So it's up to you as an agent, and we will try to help you, and I think Sam especially, to sort of give you a list of lenders that we've worked with or lenders that we're directing deals to. Lenders will also know that they'll advise us and say, hey, look, this is sort of where we want to be. And if you can bring us deals in this area, it'll give you a higher percentage chance of getting it funded. Strategies for working with various lenders. You know, I think, Sam, I guess it all depends who's on the other side of that phone call or computer screen, because they all have their, you know, likes and dislikes. Very important to have a good rapport with them. If you ever have a problem with a specific lender, they have a tendency of turning you down for future deals. So you want to make sure, and in that regards, if you can get in face to face with them, the old, you know, lunch, dinner, coffee, whatever, take time, get specifics on the lenders as you get to know them. I tend to keep specs on their kids, their birthdays, anniversaries. Yes, very
personal.
important. Why is it important?
Make it
Because they get calls from all kinds of mortgage offices, all kinds of agents. How do they separate? How do you separate people who you answer the phone on? If you get a call and you're like, oh, I love looking at when people get phone calls and they'll say, oh yeah, no, I gotta take this. Or, oh, yeah, just put that. So the key is you want to be the one that they actually answer. And to do that, you have to separate yourself. It kind of goes, Mary and I had a discussion early on. So my wife's an educational consultant. She specializes in getting kids into Harvard and other Ivy League schools. She charges a lot of money, but when she calls, people answer because they're like, oh yeah, I want to increase my chances for my kid to get in. She herself went to Stanford. So, you know, it's a great story. She was at Stanford when Tiger Woods was there. So these are all things that people remember. Like whenever I tell that story, people are like, oh yeah, I remember she went to Stanford when Tiger Woods was there. So remember that these guys with the banks and the lenders are all individuals who have preferences. And so once you get an idea of what they like, you stick with that. Sam probably does that already, right?
Yeah.
Yeah. So Christmas time, you know, gift baskets, sure. I used to be
Very expensive time.
very expensive. But you're sowing the seeds. You know, I have a
Yeah,
friend who's a
100%.
financial planner. This guy's a financial planner. He only deals with insurance. Like, imagine selling life insurance. That's what he does. But he's a great chef. And so he cooks up and he'll make all these little things and he'll do a basket. And he'll do it by hand, and he'll deliver it by hand. And he goes to like 20 or 25 different people in the industry. Because he's an insurance guy, he needs leads. And his leads come from lawyers and accountants. And so he invites those guys to his house and he cooks for them. It's hokey. I said, why are you doing that? Because if I take him to a restaurant, it's gonna cost me a ton of money. So I have a bar, I hire a lady to help me with serving, I serve lunch or dinner for 10 people. They remember, they're like, you're that guy who invited me over and he sent me the basket. So when they have a client, they refer. So this is interesting. It's different ways of marketing, things that you like to do that fit in with what they like to do.
And think about that concept. You know, when somebody invites, well, this is me, when somebody invites me to their home for something like that, I think that's a bigger deal to me than somebody taking me out to dinner.
Yes,
But then the concept is it saves the person money.
correct, but people.
So you're making a
Yes.
much better impression and you're saving money, you know what I mean? That's a win-win, right?
So
But
right
it
away,
goes a lot further.
when my friend calls me and says, listen, you gotta bring somebody to the next lunch or dinner, I'm thinking, you know, I got Jermaine coming, because I think he'll appreciate.
Yeah,
And also the people that you meet at the table,
yeah,
right? It's all bankers, people from different things, and then they get to know you.
Yeah.
And they're like, oh yeah, if I have a mortgage issue, I gotta go to Mary,
Yeah.
because I know that's what she does.
yeah.
Alright, so let's move on. Meeting with the client. Okay, importance of initial client meetings, building rapport and trust, key questions. So what do you think, guys? New agents, what is the whole idea? What are the questions that we're gonna have on that first meeting? Jitender? Oh, mic off.
Yeah, personal questions like we discussed, like the IDs, and
I wouldn't even do that on the first meeting. Don't ask for IDs on the first meeting.
so is it gonna be like, having beers or something?
Well, it doesn't have to be beers, I mean, it depends on the client, right? A lot of
Yeah.
times, I think you wanna keep it a little bit more business-like, but again, as,
Cup of coffee.
Jermaine mentioned. You wanna break down, you wanna make them remember you from everybody else.
So there was a point somebody raised in the last meeting, so it was like throwing questions in between the conversation, like, you have casual questions and then you have some business questions.
Yes, yes,
Right,
I like that, I think that's sort of a good way to figure out, are they gonna be a potential client, right?
Yeah.
As you get better at it, and as people get to know that you're the guy to go to, they're gonna be vying for your time. And so you have to value that time. I follow a whole bunch of guys on social media who are in the mortgage business, who have very few clients. Like, they'll have like 5 followers, but I wanna see the growth of from here to there. There's this one guy, it just caught my eye. He put it out there, he said, hey, do you have mortgage questions? Are you open for a renewal? I'm going to be at the Starbucks this Saturday from 2 to 6 at this location. Come and see me and I'll buy you a coffee. Like, it was so hokey, but it actually made me think, and I went to my map to say, well, how far is that guy from me? And what am I doing on Saturday?
Yeah.
Because, who does that? Nobody, right? Most people say, call me, I'll answer your questions, I'm gonna do this. The key is to differentiate yourself from everyone else. Don't do the same thing they all do. And one of those things is doing something that people remember. Oh, you're the guy who's at Starbucks from 2 to 6 and you offered to buy me a coffee. Will it be a specialty coffee or will it just be a basic coffee? I'll bring a dessert item, or I'll buy the dessert, whatever it is. This is again standing out, and they're questions for the first meeting, right? Marcin, what do you think? You've had some discussions with new agents that have come in. Do you think?
Yep. Yeah, so just like what Jatinder said and what you've also relayed, I would say that at the beginning stages, and I would like to hear Jermaine's perspective as well from his experience. You want to keep it personal, you want to keep it casual, right? Because if you go too business, they might get turned off.
Yeah.
Right, and then you also want to qualify them as well to see, like you mentioned, are they actually a client or are they just wasting your time?
Yeah.
Or are they just trying to use you for your time for free?
Yes.
Because a lot of people like to leech off of you, right?
Yeah.
So.
Yeah, the leeching and but I'm finding with social media, a lot of the senior trainers. I was out yesterday with a guy who's a dealer principal over Remax office. They have 308 agents. And, I said, so who do you follow? And he's like, gave me 2 names of, sort of real estate trainers that he follows. And he said, but most of the people, I said, well, who do you respect in the industry sort of here? He goes, not too many people. Because they all follow the same rule, right? And he goes, there's a couple of big owners of offices, and he goes, they sign up people for these exclusive deals as an agent from another country, like specifically this was from India. And guys with money come over here and they want to get in the business, they'll get them to sign an exclusive contract. If they want to get out, they gotta buy their way out. $20,000 to get out of it.
Sounds like the mafia.
It is. Yes, right. So the issue is, this guy is like a big deal. He's sort of teaching agents and new people, but he's like, look, you're gonna be with me for this period of time. If you wanna get out, it's gonna cost you this. Now, this is a negative, like his reputation is terrible.
Yeah.
But when somebody is new to the country, and I think agents too, they're looking for support. So here at Kingsdale, like we just give it out. And I think even on social media, I think it's important to sort of share as much information as possible. Yes, it might seem like, in your case, you might be wasting time. Like you'll go to meetings and you'll say, that was a waste. Second one, that was a waste. But eventually, you'll also get better at asking questions.
Mm.
So a lot of times before I even go to meetings with people now, I'll just call them and I'll say, hey, listen, I'm really busy, but I'm willing to come out if it's a smart fit. And you know what? It might not be, right?
Mhm.
And you tell people right on, we might not be a good fit. And so let's see if we are.
And I think that the situation is very different between you and new agents. New agents, they don't have those clients.
Right.
So for new agents,
Gotta
I'm
build
looking at, you have to build this. So
Build.
you have to go to all those meetings
Yeah.
and you have to give free advice as much as you can.
Yes,
So that people start trusting you.
yes.
So I think that's the difference
You're right.
between
You're right.
like experienced one and
And
non-experienced
then at a
one.
certain point, you will be experienced,
Yeah.
but right now, you're new, and
Yeah.
granted, I absolutely agree. And so if you become a student of everything to do with mortgages and the good thing now is it's all available, right? You
Yeah.
can sit in a room on your phone for 5 hours and just learn as much as you can, but it has to make sense. And then when someone comes to you, they say, Marion, what do you think? Where do you think the mortgage rates are going?
Exactly.
You will be
Then-
able to impart.
Yeah, and you have to have the right answer to,
Yes. You're right, and that'll come in time, right? So there's no pressure, but Mary's right that you need to actually go through it a few times. And so even if they have a heartbeat and they can ask a question, you are open to talking to them.
And Amit, you mentioned that the guy that you were speaking with, that there were two people that he referred to, that like those are the people that he follows.
Yeah.
Do you remember those names?
I'm gonna get them, but they're very generic, and it's specifically for the real estate industry
Okay.
as a franchise owner of an office.
Ah,
So-
okay, very
So
niche.
they're actual high-level trainers.
Right.
Like almost like the Anthony Robbins for that industry.
Okay.
Right, and so a lot of these guys, I follow a few of them, I mentioned it last week. They're
Right.
good, but they can't
Right.
be good every day, right? So a lot of times, they're just throwing stuff out there and you're like, you probably read that somewhere else.
Yeah.
And there's a lot of it, even now with ChatGPT and the whole
Sure.
AI space, like who knows? People are just talking and it's gone, tomorrow I gotta come on. And he even told me last night, he goes, I gotta shoot some video today, because he goes, I run a morning inspiration time for all our agents. Every Monday morning at like 8. And I said, and how long have you been running that? He goes, 3 years.
Wow.
Because every Monday I have to come up with something inspirational. I said, how long is that for? He goes, 2 minutes. I said, oh, okay, that can't be that hard. He goes, no, it is, because like, how do you inspire people?
Every day?
Repeat yourself.
Holy smokes.
Yeah, so, no, once a week, actually, he said Monday, every Monday.
Right.
Yeah, so anyways, the point being is that, yes, you'll have to meet people, you have to talk to people, and they might all work out, right, Jermaine? I'm sure, yeah.
What I do is, and I done this in the car business, is, you got, like you said, you got a qualified client, right?
Right.
So, if I do get a call or if somebody was referred, whatever, I start asking questions like, well, how can I be of assistance?
Mhm.
You know what I mean? And they tell me, hey, I wanna refinance my house, I gotta pull some money out, I gotta pay some debts.
Mhm.
Right off the bat, I know, okay, if the threshold is 80%, I start asking, okay, so, conservatively, what do you think your house is worth?
Mm.
I think my house is worth $1 million. Okay, what's your mortgage balance? Maybe 500, so right there, I know it's 50% loan to value.
Yeah.
This is the deal. You know what I mean? Like this is.
Yeah, so he's already done the math.
This is the deal. This is the deal. Then I start asking more questions, and once I realize, now I can go in a different direction. How much is the house worth? Worth $1 million, right? What do you owe? I probably owe about 780. That's gonna be a little bit tight.
Right.
Because
There's no
now,
room.
there's really no room, right? So do you really wanna take that meeting? You know what I mean? Like, do you wanna drive across town?
Right.
You know what I mean? Like to
Just
go and
say
meet.
no.
Yeah, you know what I mean? So I do intensive qualifying.
Hmm.
You know what I mean? And if I know that, there's the loan to values, I'll take the chance.
Hmm.
I'll gamble, because I'll gamble and go to wherever I need to go to have that meeting and buy whatever I got to buy, coffees or whatever the case may be.
Right.
And see if I could turn this into, if I could turn this into something.
And to just further touch on that point, so you both mentioned from your previous experiences that you like to meet the client in person. Do you ever do like screening calls or like Zoom or whatnot?
Some people don't want to, like, The majority of my clients are, can't even say that, but, I get a lot of, I get a lot of, leads from, bankruptcy trustees.
Right.
So the lane that I'm in the refinance. I'm not really in the buying, I don't really deal with buyers too much. You know what I mean? Like the majority of my business comes from, people who want to refinance, pay off debts, stuff like that,
I
right?
see.
So, I get referred, by bankruptcy trustees, and these trustees are like all over. I have some guys in Barrie, I got some guys in Hamilton. So some people they're not leaving Barrie to come into the city.
For
So
sure.
the majority of the time, it's all over, you know,
Phone calls.
phone, email, whatever, you know what I mean? So it just depends. It depends. I like
In person.
I'm old school, man. I
Yeah.
like the in-person.
Well,
but
because you're picking up things through body image that you don't necessarily see on screen. So during the pandemic, I did a lot of stuff on Zoom and on WhatsApp and video call, FaceTime.
Right.
It's fine. I sort of left it to the lender, because what I do is I price it two ways. I'll say, if you want me to go in person, it's gonna be this much, which is just under an appraisal, but I'll get it to you faster. Or if you want me to do it by video, it's gonna be cheaper, but then, you know, and it backfired once, actually. And we did a deal in Welland, and this house was fairly old. And so the guy was trying to, you know, get a mortgage, and I went over on video. So, because they didn't want to pay me to go there. And we did the video and it was fine. It was a big house, you know, 8, 9 rooms, and he wanted to make it into a hotel or a rooming house or a, you know, whatever, some sort of residence. And, you know, the lender gave him the money. Eventually he stopped paying his mortgage and ran away. And so they said, well, what's going on? Like, you valued it this much. I said, yeah, based on the comps at the time and the video that I had. And I still had the video. I said, here's the video. The guy was so unscrupulous. He only showed me certain parts of the house. Like, he strategically showed me rooms that were good. And one of the first things I do when I do a video, I'll say, step outside and show me a picture of your house. Because I think some smart guy would actually show me another house, right? To say, well, that's actually the house. Well, no, it's not. It was this house. So, you know, this one, it was a good learning for the lender, because the lender realized they were being cheap. If he had sent me, I would have told them that it's in the worst part of Welland. It's across the street from the John Howard Society that looks after ex-cons. And there's like drug dealers everywhere. Like, it was just the worst part. But because they were really being tight on money, I gave them a very conservative evaluation based on comparables, and they lost on that deal.
Right.
So, yeah, so to answer your question, yes, I think all of the above. If you can, you know, initially, as Miriam said, you're new, you might as well try to do as many face-to-face.
Yeah.
But as you get more and more busy, and some of you are doing this, you know, and also doing other things, so geography, like, do you want to be driving across town to meet somebody? I think normally it does help. They get to see you too, that you're not just some generic guy that they can.
They can trust you more.
They can trust you more, maybe, if they're genuine, right? Not everybody's genuine.
Yeah.
So. Good. So are we doing good for time, I think?
We have half an hour?
Yeah, even though Ilona's like, why 2 hours? I think we need the 2 hours, you know, it's good. Application forms, so yeah, so essential forms, again, we talked about completeness, accuracy, it'll only help you later on. Certain lenders will start looking at you a specific way. And you want the lender to say, oh yeah, I got a file from Jatinder, he's always very, very accurate. Don't have to worry about that one. And they sometimes will think twice and say, well, no, I got it from so-and-so. You know, the last couple of deals, they had things missing, they're sloppy, we better give that a second look. Any additional required documents that you think we would put on? No, it's everything to build a case, right? Because you're building the case of the client. So if the client, and I've had some lenders say, well, they want a mortgage, is there anything else they can provide as security? Another property, you know, a vehicle. I've had someone say, okay, jewelry, artwork, they've thrown in evaluation appraisals of those things as addendums to support. You know, because sometimes lenders will say, I only have a 75% loan to value, property is worth X, they're on the edge, can they give me something more to make me comfortable?
Yeah.
Oh yeah, they actually have a rental property that they're gonna give you a cross, the term is used is usually cross collateral.
Yeah.
You know, sometimes they ask for more than they need, that's what you have to sort of decide how to work it. Jermaine, anything to add?
I call it lipstick on a pig. You know, our job is to try to make, staying within the rules and the guidelines, our jobs are to try to, our job is to try to make, the clients, you know, as attractive as possible to the lender,
Right.
right? By, you know, collecting, you know, extra,
Mhm.
whatever, try to show that these, you know, these people are creditworthy, you know what I mean? So
Right.
it is very important to collect any type of additional documentation to show the lender that this person is worth, you know what I mean?
they're saying.
The lending to, right? So that's why I call it putting this.
Yeah.
On a big.
Yeah, and a lot of times it's, again, understanding what the lender is looking for, right? Sometimes they're very cookie cutter and they're like, nope, just send us the appraisal, the verification of income, credit report, application, and that's part of the dog work of actually being an agent is
Yeah.
collecting all this stuff. And then you're like, now you want me to add more stuff? Well, I'm suggesting that you add whatever you need to do to get it done. Because you don't want it to keep coming back from the lenders saying, well, you know what? Yeah, we're okay with this, but can you give us some more verification of this?
Yeah.
Right, so you almost have to be a mind reader, see what the lender really wants.
Once I know that we're doing a deal, I try my best to collect as much documents as possible.
First time,
Because what ends up happening now is when you keep going back and forth with the client.
they
you
get
get more-
annoyed
Yeah.
and they think that you don't know what.
You're an expert, right? So they get upset. and they
Happened
get-
to me.
Yeah, they get agitated.
Why did you ask me this? Why didn't you ask me?
Yeah,
at the beginning?
exactly. So from the jump.
It's probably something is wrong with my case, that's why you keep asking.
Oh, yeah, exactly, right? So if you can collect it from the beginning and you
Yeah.
have everything, then you don't have to annoy the client.
Collect more.
Yeah, collect, yeah, exactly.
Yeah, so a lot of times, you know, and you'll get better at it, because you'll say, oh, you know, this lender last time asked for this. So from now on, I'm gonna always add it in, right? And it just saves you that time. And it shows you as the expert that you're not gonna be one of these people who are constantly bugging them, right? Ilona's here joining us. So anything that you can add in the way of essential forms?
Here.
Well, you know, we all bring a little perspective, right? So. Okay, deposit verification. Can anyone speak on this?
So nowadays, one of the, one thing that the lenders are really, looking into is money laundering, where this money's coming from. So, with purchases, definitely, the banks or the lenders want to know where this money coming from,
And how long's it's been sitting in the account? That's another one where they'll say, if you have a client who's like, yeah, I want to buy this $1 million property, 80% LTV, I got 200 sitting in the bank. Oh, it just came in 2 days ago by a wire.
Yeah.
You might need to
But
explain.
it's, as long as you have a good explanation for it,
Yes,
it's
yes.
fine. For instance, yeah, I live overseas,
Sure.
This is the.
Yep.
the receipt of the. letter.
Yes, yeah,
So as long as you have, explanation.
it's gotta make sense. I find that banks are in a conflict here. And it's been shown in any sort of research that on one hand, they wanna sell you a mortgage product. And so it helps them if they get a deposit, they need the deposit. So then are they really going to push that much to verify where this 200,000 came from? Probably not. It's a different department, compliance, and the compliance sometimes fights with the actual sales department, right?
Oh, for
Because they're like, well, we want the business, so you don't wanna tick the client off. The client says, okay, no, you know what, cancel, I'm gonna go over across the street to another institution who are not gonna ask me these questions.
Yeah.
They're all supposed to be asking under FinTrack rules, but
People nowadays, everybody's trying to get around the red tape. Nobody wants to be,
Yes.
involved in anything that's too,
elaborate.
yeah,
time-consuming.
and people will pay.
Yes.
People will pay extra, it's just, you know what I mean, like,
Yes.
people, it's like, I use this philosophy all the time, like, you can go to the convenience store and probably pay $2 for this, or one, you know what I mean? Or you can go to Costco, you know what I mean, and
Buy the whole
what
case.
have you been in the line in Costco? You know what I mean, do you have time for that?
Well, and it is convenience factor. I've heard the same example with water, right? Water at a concert can be like $6 or $8. Water bought in bulk at Costco or anywhere, it can be down to 10 cents. But it's the convenience factor. Happens to be there, you want it, you justify it in your mind.
Hmm.
My daughters really want to go see Taylor Swift next November in Toronto. Tickets are exorbitantly expensive. I have a friend who has 4. So he's like, hey, I got these 4 tickets. And I said, well, he goes, what do you want? What are you gonna pay? And my daughter said, I'm gonna call him. I said, okay, you call him. She calls me and said, okay, what did you pay? Because it doesn't matter,
How much you gonna pay?
right? Doesn't matter what I paid.
Mhm.
Point is, I have them and you want them. And for you, because normally I would charge $10,000 for the 4 tickets, $2,500 each.
Right.
Because, but I know your dad and I would drop it to $9,500. I said, $500 discount. I said, he goes, look, he said, this is my ticket. Like I can make serious money on this.
Definitely, yeah.
So that's the market, right? And
Wow.
so, yeah, I said, well, will I need to do any deposit verification or do you just want a straight e-transfer? Because straight e-transfer. So really here, you need to sort of verify, but enough that your lenders come.
Hmm.
That's it, right?
And when it comes to that stuff as well, I'd imagine it's different when you're on like the A side or B side versus private, right?
Absolutely,
And I
very
imagine,
different.
and private, it's probably a lot more
Easier?
lax.
Yeah.
Well, because now with private, and again, so some of you, can't do private yet, but when you do get the private is really helpful because they're much faster. They don't verify anything. And everything's done through lawyers, so it's absolutely legal. There'll be a lawyer on the lender side, a lawyer on the borrower side. They might have some income verification that they might have to do through Law Society or whatever, but it's less onerous than banks.
Got it, okay.
I have a question, Amit.
Yeah.
So just imagine if you have some money coming from overseas,
Yeah,
probably from your parents,
Yeah.
and it's sitting in your bank account.
yeah.
So if it's sitting for a while, do you have to provide any,
No.
explanation for that money,
It's
or
3
how
months,
long
right?
should it be
Yeah.
sitting in your bank?
It depends on the lender, right? So some lenders have the 3-month rule, some have different rules, so. But I think having the explanation that it's came from my parents is absolutely fine. Nothing wrong with that.
As long as you have the gift letter.
Yeah, some of them will ask for a gift letter where, your parents are actually stating, a letter saying, I sent to Dinder, my son, this much to be used for his down payment on his property.
And I don't
So-
want it back.
And I don't want it back, very important. Yeah, because that causes that problem on the lender side later, right? Like if there's a family dispute and then the family's like, no, I gave you the gift letter, but it states that I'm gonna ask for it back in a year because I need it to, to buy my next son or my daughter or whatever. And then it could cause you financial hardship, right? Could put the asset at risk, so.
And it has to be like any kind of notary attested or something, or
You know how
it's
it is in India.
just a simple.
In India,
letter?
it's very easy
Anybody
to
can
get
write it,
anything
right? So
notarized.
it's not that
Here, it's
safe.
harder.
Okay.
People charge you a lot here for notarization, but India, the problem is, as you know, a lot of fraud going on, right? So any documents that come from India, you have to sort of go to a higher threshold just to sort of satisfy the lender. And I personally think, yeah, get a gift letter and get it notarized, because even the lender might not say it, it gives them a little bit more reassurance. Right, like, hey, Jatinder knows his stuff, like he's actually gone to that trouble of getting it
Yeah.
done, right? It just helps you. And it's one less obstacle. Timelines and how long? So, I don't know what people think as far as duration, and here, I think the key is the third line, managing client expectation. It's very important as agents to kind of give them an idea of how it's gonna take, how long it's gonna take, and what the steps are. As long as you explain, I think people are okay. If you don't let them know, then they kind of feel that you don't know what you're doing. You don't want them to know that they're the first client. I think for a lot of you guys, the key is gonna be the first client. Now, unless it's a family or a friend person, you can say, well, listen, I'm new to the industry and, I'm gonna help you out and, you're gonna be my test case. A lot of clients don't want to be that test case. So you almost have to say, well, I've been involved in, a few, I've been involved in half a dozen deals on a supporting role. And then this is gonna be one that I'm doing on my own, right? I always think of the example of, an eye surgeon, working on your eyes for laser. You don't want him to know that he is the first client he's worked on, but obviously there was a first client, right? So what they do is they'll have them observe and consult on dozens of them. And then they'll say, oh, this is Dr. Marson. He's worked on hundreds of cases with us. And now he's gonna be working. So they're sort of like not wanting to make you scared that this is the first one you're doing on your own.
Right.
You've actually observed and done. So maybe that's what we'll do in these training sessions. We'll bring lots of case examples and you'll be able to see
I
everything.
think that's a good idea.
Yeah, because that way you can honestly say, yeah, you know what, I've worked on the following files. I've got live files like right now, like even as I was driving over, I've got a guy in Hamilton who wants evaluation and we're sort of talking about it. And I said, oh, will I go? I might not go. But my piece is really just that one piece. But I have a lot of clients even who are set, but they're private. So we might need to get Sam to bring in some of his A-level clients who are dealing with banks. And,
Right.
you might have other agents who have that. Factors influencing duration. A lot of it is just your own timeline, getting the data and the paperwork. Because the client is responsible to get you certain pieces of documents. That is a big hurdle. Because people are like not necessarily wanting to give you employment letters showing what they earn. They don't necessarily want to give you anything. And so then it's up to you to go and dig it, right? So credit report, that's something under your control. But they have to fill out the app and some of the applications, ours is okay. I've seen some very detailed, and people just don't have the time and they're like, can you do it? It's a lot of times you might want to do it based on the information you have.
Right.
Or say, yeah, you know what, why don't we do a joint call or we'll do a three-way call and then I'll fill it out for you, but I'll just ask you the information.
Right.
And you tell me and I'll fill it in. And then, oh yeah, you're gonna get me the T4, oh, I don't even know where that is. Yeah, so you'll have to go through this almost checklist again to say, okay, do I have this, and this? And then be clear with the client and say, hey, listen, if I don't, the sooner I get this stuff, the faster I can get you, a commitment.
Mhm.
And that's the whole idea, is to get a commitment letter from a lender. Once you have the commitment letter, then everything starts flowing.
Now, when it comes to refinancing, so I'd imagine that it's different when it comes to a timeline versus like if it's like a sales or a buying, right?
Right.
So like, how would that work exactly? Like, what, is there a time period that
The
they?
sooner the better, because each lender is different.
But is there a deadline that they have to do? They have to be
Yeah,
approved
again,
with somebody at
Based
some point?
on the lender, right? So
Okay.
a lot of times what happens is the lender will say, and the government is actually trying to sort of put some consistent terminology
Yeah.
to say that all lenders should advise all mortgage borrowers at 6 months before renewal. But lenders are also not always on the same page, so they'll
Right.
say, no, our policy is we're gonna advise you 3 months before.
Mm.
And then you have to let us know 30 days before.
Right,
So again, it's up to you to find out what each lender's specs are.
got it.
Right.
Okay.
And so the problem we have is sometimes I'll get like files that are rushed because the renewal of private especially, they only do 1-year deals.
Mhm.
And the private will advise the client, hey, we're not renewing. We need to deploy this money somewhere else. Nothing wrong with you. Well, you had 3 NSF checks, but that's okay. We're not renewing. So you as a borrower have to pay back that lender and you have to make arrangements with someone else. And I'll tell you, people just don't start soon enough. They'll be like,
Yeah.
oh, it's not due till February, it's the holidays.
They like to procrastinate, right?
Everyone does, it's human nature. So what you need to do is say, hey, listen, Mr. Client, I appreciate you're really busy, but let's have a few timeline deadlines, right? Because if you miss those, then you're gonna be really pressed and you could go into default.
Yeah,
And I have many of those, because the guys just cannot get new financing in time. And so then they fall into default, and there's a whole bunch of fees that fall into place.
Hmm.
And the lenders sometimes will push for power of sale proceedings on the home, because they have to, like they're like, if we don't do it now, we lose our timeline. So the lender's like, oh, power of sale, and then you're like, oh man, okay, what do I do? They'll say, okay, you know what, we'll give you a 30-day extension, but there'll be a fee of whatever, and you're like, okay, fine. So we do like to procrastinate, but in some cases, people have lost their homes.
Right.
Or have had to pay huge fees to sort of get things right,
Mhm.
you know? So
Got
to
it.
answer your question, yeah, it really depends on the lender.
Perfect, thank you.
Yeah, so typical timeline, I always tell people that, yeah, it's different if it's a new deal or if it's refi, and the sooner the better, right? There's, no one's ever told me, hey, this has come to us too early.
Yeah.
Yeah, like, well, I had one client, I think I brought him up last year or last meeting. So this is the guy who's buying a condo in Dubai, he has a house in Toronto. We've got everything ready, I provided a commitment letter, he's holding off, now he could be shopping it. But I think his thing was, well, I've got an extension to buy the condo in Dubai till, I have an extension till February. So do you mind if we just sort of chat about it in January? I said, you know, it's up to you, I've given you the timeline.
Mhm.
He's paid an initial fee to evaluate, we have everything set, now it's gonna be going to the lawyers.
Right.
And when it goes to the lawyers, he has to pay a legal retainer, which is $1,500. So a lot of times they will be like, oh, I don't know if I wanna pay that $1,500. And so what I try to tell the client is, hey, if you wanna back out, you can back out at the lawyer's office.
Meeting,
You
yeah.
don't have to sign,
Right.
but you're gonna lose the 1,500 because the lawyers have already worked on it, so.
True.
Yeah, so hopefully that answers some of that. Next one, lawyers legal, yeah, importance of legal professional. So, yeah, you know, there's lots of lawyers out there. I think my suggestion is always to try to find and talk to them, right? And a lot of lawyers don't market very well. So if you call in or if you see a lawyer's office, just drop in, talk to the secretaries, explain that you're in the mortgage business. And if you've got a card, give it to them. If they have a card, take it, add it to your Rolodex. And basically find out if they specialize in real estate, because that's what you need.
Mhm.
You need lawyers. Now, we as an office probably have few that we can refer to.
Right.
But you are in a real key position here, because lawyers by themselves have a hard time getting business,
Mhm.
right? If you bring them business, you will be a trusted referral source, and they will be there to help you in certain cases.
Right.
And how can a lawyer help you, Marcin, in a situation?
In a number of ways, right? Well,
Yes.
first of all, they can start on the referral side, right? They
Yeah.
can bring you clients.
Yeah,
Right? The
yeah.
second way is that also if you have something in a transaction you're not really sure about, you can always ask them for their,
Mhm.
input, right? Either you pay them, or if you have a good relationship, they can
Yeah.
do a pro bono, right?
Yes.
And then also, for example, let's say you need a lawyer to close on the deal,
Yeah,
right? So they
yeah.
could even just work on the deal itself, right?
Sure.
Either representing you, well, I guess you wouldn't represent the lender, but
Right.
represent your client, right?
Yeah.
So there's a number of different ways that you can do that. And like you even mentioned with the guy that basically his lead source is accountants and lawyers,
Mhm.
right? So you can build a network of those kind of people, and then you can just get that lead flow.
And you
right?
know, you can take that tip and say, hey, listen, Mr. Lawyer or Ms. Lawyer,
Right.
I'm planning on meeting a potential client for a coffee or lunch. Would you be interested in attending?
Right.
Now, if they're new, they probably will, because they themselves are looking for them, and there's so many real estate is like the number 2 after immigration.
Yeah.
Immigration or personal injury, I should say. So personal injury law is huge, but real estate, a lot of people in it. The problem in the real estate side is the prices have come down
Mhm.
for basic closings.
Mhm.
Now, these are not basic closings, because if you're involved, it's a mortgage,
Right.
which adds more money because there's more documents, more review. But if it's a standard real estate transaction, a lot of them will do it for $1,000. And, you can just go in, and how many files would a lawyer need to do to sort of be able to be in business, right?
Yeah,
Many of them have to do like 30, 40, 50 files a month
Yeah.
to sort of be able to keep the lights on. So
Yeah.
I think if you can establish some relationship, and I think even through, if you have a banking connection, talk to your bank person and say, hey, listen, is there a lawyer that you can recommend that you guys do work with?
Right.
Introduce yourself. So there's a lot of marketing actually in this job, in the sense that you are marketing for clients, but you're also marketing for advisors. And those advisors would be very happy to be with you. And I have mortgage people who actually have golf tournaments and movie nights and all kinds of things. So they want to build a
Build a
nice
community.
team of people. And so when people come to you and say, oh yeah, you know what, I'm thinking of getting a place and I know you're in the mortgage business, how else can you help me? You say, you know what, I have a really great lawyer, I have a really good accountant that can help you. I even have guys who are specialized in moving. I've got stagers, like a real estate agent, you can have a network of people that can add value, and that doesn't cost anything. And that's why you'll be really the person that they turn to, right?
Interesting, yeah.
Yeah, so yeah, collab with lawyers, that's fine, and not all of them, you know, be interested, and the guys who are busy probably don't care. But again, trying to find people who are like you, who think like you, and that you can learn from. I'm gonna skip the case study, because like we're sort of at the end, and that's almost like a separate, I could spend an hour on a case, like, you know. But we will do more case, because I think the feedback we got from last week is people really like the personal info. I think having Sam is also very helpful because he's been in the business a long time, dealing with primarily banks and A-level lenders. And again, questions, comments, I think we can all learn. And if you even got a little bit of information or at least encouragement, then this was worthwhile, right? And helpful. And Ferris, we did not hear from you, but here's something we've added. It's a commission explained. This was a slide that came out during the week in the WhatsApp, but we talk about sort of like the mortgage amount, right? So we've thrown in all kinds of numbers, but here's a typical $850,000 mortgage amount. We've got a 70% sort of LTV, so financing amount is $595. How do we calculate the finder's fee? Well, here it is. It's 80 basis points. That's the BP on 595. So it comes to 4760. 4,760 is the fee that the bank or lending institution will pay to Kingsdale. And here's the mortgage split. So in the industry, this is very, very generous to be able to say, okay, Kingsdale will keep 10%. And the broker or the agent will get 4280 for. I know right now a lot of firms will charge 2080. So you are paying more, you know, to the brokerage. I think here we're trying to keep it all the same for everyone. This is very generous. Usually only the senior people get that kind of split. There's a lot of places that go 50-50, where they'll keep 50 and they'll give you 50. So again, I mean, the key here is it's generous, but you gotta be able to get the deals in, right, to make it worthwhile.
It's always 70%?
No, so it depends on the actual lender. So in Jermaine's case, right, we only got that, we wanted the 70% because we needed to figure out what's the amount that we're talking about. So if it was 80%, then obviously it would be higher. So whatever
So
the,
every
every deal is gonna be different, right? So questions, Jatinder, Ferris? Anybody else? No? And there we go.
Yeah, also,
Yes.
is the finder's fee dynamic also, or is it always 0.8?
I think so it depends on the lender. So a lot of lenders are at 80 basis points. I've seen some that are at 110, 120. Private's obviously higher, but once you guys get your private license, you know, it'll be higher.
Right.
And then, you know, the interesting thing with private is you can sort of add it to whatever you want. And so I've had some some agents, they say, well, what is the lender gonna charge as a fee? And I'll say, well, the lender typically is gonna charge 2 to 5% as a fee. And then they'll say, oh, I wanna charge 5. I said, well, no, you can't charge more than the lender. Like if the lender's charging 3, you have to be at 2 or 1.
Right.
But imagine, like, if you're at 2, that's 200 basis points. So on a lot of these files, I've seen agents make, like, on average, $10,000 a deal, because there's a lot of complexity.
I'm so sorry, I have a meeting.
No problem.
Thank you. Thank you.
Marion's
Bye.
leaving. Thank you
Bye,
so much for
everybody.
coming.
Bye.
Nice meeting you. Yes.
So
Yeah,
sorry.
that's okay. So, yeah, so it really depends on the deal. And I find that sometimes, you know, I look at it and I'll say, well, that seems very high, but you know, the guys shop the deal around, no lender wants it, you know, the person has really worked on it, and in the end, they get the deal done, they get paid what they want, right? So this is where private, it's all over the place. With the banks and trust companies and credit unions, they really try to keep it very tight. But even 80 basis points is still very generous, and that's why we have this slide to show you that, how many hours would you have to work, to sort of generate that kind of income? And as long as, the problem is that people look at that and they say, oh, well, if I do 2 of those a month and I do like 10 a year, I'm gold. And I said, yeah, but look at the average mortgage agent. The average mortgage agent does 1 or 2 deals a year. So the key is to keep consistent, to keep a network of people, to be out there. And I mean, I can spend another training session on sales techniques, but the point is you need to kind of find your niche. Like, it was nice to have Jermaine here who kind of explained that in the overall world, he's only specializing on people who deal with bankruptcy trustees. Like, that's such a niche market, but he probably doesn't have as much competition, right?
Yep.
Those people who are in bankruptcy situations who want to refi, they just want to call somebody on the phone, because right away they're gonna say, oh yeah, I'm going through bankruptcy. And people are gonna go, click, I don't want to deal with that guy.
Yeah.
But Jermaine, smart, that he's sort of found his niche. I have friends who specialize in new immigrants, and they get really involved in that whole new immigrant space because they said you get to be friends with them. Then they're a good example. The Indian community, like in Brampton, they like to deal with their own people, right? So they deal with Indian agents, they deal with Indian mortgage agents, and almost all contractors, they want to prefer their own. And it's great, good for the community, but hard if you're not in that community, right? So you have to find, again, your niche. And what is
I
that?
think it might be with other communities as well, like they
yeah.
feel comfortable with, the
Correct.
way they talk, they can talk in their
Yeah.
native language and explain better,
Yes,
possibly.
yes,
But
yeah.
I think it's with all communities.
Yeah.
So it's a bit of a challenge in Canada.
Yeah, it is. I mean, that it's gonna be a challenge, a new country. I mean, I know being Indian, but moving here over 50 years ago, it's people are like, yeah, but like you look Indian. I say, yeah, but I enjoy a good chai. So if you make a good chai for me, I'll give you a chai discount. I always offer that. But it's really showing people that you're knowledgeable. It's like not enough to say, yeah, I'm part of this community. I know so-and-so, I know so-and-so. The point is, are you good? And similar to real estate agents, about 80 to 85% don't have knowledge. Like they're just showing up, doing stuff, basic, right? You want to find that top tier of knowledgeable people who are going to really add value, which is actually the same in the mortgage industry. It's not enough to say, yeah, RBC is offering this rate. That's it. No. How are you going to add value? I go to Jatinder because you know what? He knows what's going on. He's got good relationships with lenders. He's going to show me what paperwork is going to get done fast. And in the end, he's going to get me what I need. And once you do it, you're not going to deal with that client probably for a while, but they have friends and family, and they will be your referral source. They will say, I dealt with Jatinder, he was great. And this is how he helped me save money, or this is how he got it done quickly. This is how he sort of, he came over and he actually spoke to my dad and mom, and we sat and we really got to understand what was involved, because it's a new country. We have no idea. Why are we spending $1 million to buy a place in Brampton, and what's going to happen and how am I going to do it? You reassure them because and you have the contacts, and you say, look, if I don't know, I have a resource. I can actually speak to people at my office who dealt with, and they have combined over like 100 years of experience, that we're going to get what you need. But I'll tell you right now, lots of pressure. Like I'm seeing it, families are going through so much pressure, and maybe the joint family model that they have in certain communities is probably helping them because they have multiple incomes supporting one mortgage, where the traditional one income, two incomes, trying to support the mortgage and all of the inherent overheads that go with it, right? Property taxes, if you've got a condo fees, utilities, insurance, like it's just, everybody's got their hand in your pocket. So it's a challenge, but I think as new agents, it's finding your space and finding your niche. Marcin, anything to add to our discussion?
No, I think you summarized it rather comprehensively. And when I actually had a question on that note that you mentioned, when you have multiple incomes, or I guess families that are on title for that property, that mortgage. So what happens if, for example, one of the family members decides they either want to exit or they just don't want to be a part of the overall deal anymore, right? Is that sort of an internal agreement they have to do ahead of time, or how does that work exactly?
Yeah, so I mean, it depends on how transparent you wanna be, right? So a lot of times, and again, it depends on the lender preference. A
Right.
lot of lenders have income verification, and if you've got 3 or 4 parties on title.
Right.
And you're showing that, yeah, bang, 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 here's the total income, and they will maybe have a clause to say. If and when any of these members decide to move or to leave or to stop earning that income,
Mhm.
do they have a duty to advise? Most lenders don't really care as
Okay.
long as you can pay for the mortgage, right?
Right,
We're not at a point where, and I think it's a very good point, that in joint family situations, when someone wants to leave, it's going to affect their ability to pay the mortgage.
right.
But I have not seen anything that clearly stipulates that, no, you have to advise us. You
Okay,
do have to advise if you change the title,
got it.
right? So if the person's on title, and this actually happened to a friend of mine, he had a house. Now, he had gone through bankruptcy, so the house was in his wife's name.
Mhm.
And then they split up, and so the question was, okay, she's like, listen, we're split up and I'm getting married to this new guy. And he wants me to get off title here, off the house, right? So that took some time, and they actually had to get legal advice to how to do that without triggering any capital gains for anyone, because technically it was her primary when they were married. It was not part of any marital dissolution, but now she's getting married and she's gonna be primary with the new guy. So he had to get legal and tax advice on that to make sure that can it be done? Will he then still be able to have the mortgage? Because maybe he's sunk below the threshold.
Right.
And third, will it trigger capital gain for any party in there, right? Nobody wants to pay capital gain.
No.
So usually the answer is don't say anything, just let it go. Hopefully it'll work out.
Fingers
Hopefully
crossed.
everyone makes lots of money and you'll be fine. If it goes into default, I don't think they ever go back and say, well, you had a duty to advise us that, or you have to, most times people, if they can't afford it, they're gonna try to sell the house.
For sure, yeah.
Right? And the issue then is, what if the house price is less? Then you got an issue because the lender is now in trouble,
Yeah.
right? And so they'll probably say, well, no, okay, you've tried to sell the house, you can't, we're gonna go power sale. So, because that's, from a lender, that's the only option.
Right.
Right? It's like, we got to go to power sale because we want to get our cash out, even if we're gonna lose, but we want to take our chunk,
Totally makes sense, yeah.
right? And that problem then is the second mortgage. A lot of times right now,
Oh,
the
yeah.
biggest industry right now is the second mortgage industry. Everybody's running out of cash. And they're like, oh, I got a mortgage with ABC Bank and, blah, 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 and I need a second. And the lenders are like, okay, I can do it, 16%, 3% fee, private. So you're like, oh, okay, is that a good deal? They don't care. They're like, listen, I gotta pay this thing, this is overdue.
Right.
I don't care. And then when it comes to renewal, I'm gonna go to the bank and say, okay, I have a first and a second, can you combine it? And just give me a bigger first. Yes, if the value hasn't
Plummeted, yeah.
plummeted, so.
Especially nowadays with the prices going down, like you said.
Next 1 year is gonna be trouble. We were just talking in the office about, sitting in cash and looking for opportunities. Still risky, like, if you got money, it's probably better not to.
Just hold on.
Hold on and maybe
Yeah.
stick it in GSC. I can't believe what they're paying. You can get like 6% GICs, never used to do
Wow.
that.
Now it's 5 something. 4.5,
Depending shopping
5,
around, there's some
depends,
credit
yeah.
unions and stuff, 5.5, 5 3/4, still, I mean, I think that, again, it's capital conservation.
Right.
It's very easy to say, oh, I can pick up a condo for X, well, hang on, no, I would go to the builder and say, you cannot sell these. You have to really incentivize me,
Yeah,
right?
right.
So anyways,
Makes sense.
I think we're done on time, so thanks, everybody. I know it was a small crowd, but we will continue to do these every Wednesday. If you have questions, put them on the WhatsApp group.
Yep.
Or even talk to Marston or me. Thanks, Jatinder, for being 2
Thank you,
weeks in a
guys.
row. That should be worth something.
Yeah. No, actually, it's my third. Yeah. Thank you.
Third week, yeah.
Yeah, you've enjoyed. Oh, third, okay, well, you gotta send him some samosas or something. Where's home, Jatinder? Where do you live?
I live in Kitchener. Yeah.
Kitchener,
So
oh, yeah, you did.
yeah, yeah, I work remotely, so I thought of moving out of GTA.
Yeah, good idea.
Yeah.
And the
Less
property
rush.
values are holding well out there?
So actually, I'm very new in Canada, particularly.
Yes.
It's been 6 years, but
Okay.
still I consider it as new.
Great,
I live on rent, so
Yes.
I have as you explained, I have some cash sitting in my bank, but I'm looking for the perfect moment when I should buy.
you're in a very good position. I think just continue to monitor, have a few agents out there looking for you, because sometimes you can't look at everything. And look at special situations where you can go in and really see, because I think we've seen Kitchener has gone down in a lot of areas, probably 10 to 15%.
Right.
Depending on what you need, and if you're gonna be doing the, like, again, family members, do you want a finished basement? Do you want to rent that out? These are all things that you can do to sort of like enhance the income component. Right, and so that way, and then financial, being in the industry is also very good because it keeps you very close to different lenders.
Yeah.
So when it's time to get going, be like, yeah, I have a good relationship with this lender, I can do it for this much. Yeah, you're in great shape. Welcome, I'm glad you chose Canada. And we haven't seen or heard from Ferris, but I'm gonna say bye to you guys. Thank you again, thanks to Marcin. Jermaine, not here, but that's okay. Ilona, Sam, and I think Marion. So we will see you guys next week.
Thank you, guys. Bye-bye.
Okay, thanks very much.